Welcome to the official Million Dollar Traders podcast. I'm James Helliwell, and joining me today, of course, is Lex van Dam. And our special guest this week, Hugo Manenti, is one of the top performing popular investors on eToro and a $1 million trader in his own right. So Hugo, welcome to the show. How are things?
Thank you, James. Well, excited to be here and speaking with you guys. I've been following the show, and it's pretty great to be a guest here.
Great to have you on. I know I reached out to you, when was it? Probably a couple of weeks ago, when I think I'd seen you just started on Twitter with your popular investor account. And things on eToro I've been keeping an eye on myself over the past few months. And it was actually what you've done in the past few months that inspired me to get involved there as a popular investor. So you've done phenomenally well. I think for anybody who hasn't yet seen your status there, for those people listening and watching here for the first time, you've started, was it just over 12 months ago, and you're managing now over $20 million or something on there?
Yeah, correct. It's been pretty insane. I started in March last year, so right where the markets were at the bottom, which is lucky, but also intentional. And yeah, it went very fast from there. I mean, at the beginning, I did it for myself and to manage family money. And, the sort of like social aspect of things started kicking in, exchanging with people following you. And all of a sudden you get maybe 50 followers, 50 copiers. And so, why not become a VI? And then a bit of luck, a bit of good trading performance, a bit of promotion from eToro, and boom, 10,000 copiers. Happens really, really fast.
Amazing. You can see the curve, can't you, on the profile? I don't know, Lex, if you've seen yet the curve, but you've got to, as you say, over 10,000 copiers in basically a year, which is incredible. I'm just approaching my first 100, and you can probably remember how that feels when you are just starting out. When you see it go up one or two, it feels amazing. But yeah, not quite the same as seeing 10 or 11,000 just yet.
Yeah.
So you go. Congratulations, amazing performance. One question is it, does it become harder to trade when there's like 10,000 people watching you than when you had like your first 10 or 20? Has anything changed in sort of like the pressure that you feel when you're doing a trade?
You think about things twice. I mean, I would say, as soon as you start managing other people's money, you become more careful, I think, especially in terms of risk management. And, whether you have 10 people copying you or 10,000 doesn't really make a difference. You do it the same way. But certainly things that I used to do when it was my own account and there was only, my girlfriend copying me, I wouldn't do them again, trading Bitcoin, for instance, or shorting the markets more, I would say, aggressively. So I think it kind of changes your approach to risk management a little bit. But apart from that, you want to stay the same. What's given you good performance in the past. If you start getting scared and changing that, then you're not going to be able to replicate that good performance. So essentially, you're stressed, but you need to be the same.
Yeah, great. But you used to work for Richard Branson as well, right? And I'm sure, like, working in an environment like that, you'll have a lot of pressure as well. So you're probably quite used to people analyzing everything you do, and I don't want to necessarily say give you a hard time, but just making sure that you've done your research. And so do you find like this doing your research? Is how important is the research as part of your process?
It's super important. It's really fundamental. I mean, my background is in corporate finance and private equity investment, so it's all about the fundamentals of a company, evaluations, market analysis, research. That's really my background. So I think that's completely core to my investment process. I may have maybe 20% of the portfolio, which is a little bit more speculative. Like I would trade based on sentiment, technical analysis, but really 80% of my portfolio is like based on heavy fundamental research and long-term investment, kind of buy and hold.
I get that, Hugo, as well. Share many similarities, I think, there. In terms of the tactical element or the more speculative element in your portfolio, the 20% roughly, one of the fantastic trades which I've seen you take and very few others take on eToro was last month. Was it around the 7th of May? There or thereabouts, I think, roughly. Your timing going into or returning to some of the, as I call them, the momentum trades in, I think you had Enphase, was it Sunrun, also Plug Power? And their plug was up about 13% yesterday as well.
Yeah.
You produced some phenomenal results there. So having that tactical element, how do you ultimately determine the timing of that? You've mentioned sentiment, but do you look at macro themes as well? So, for example, the bond market, reflation, which has been the main topic this year, in engaging whether or not those correlated trades are likely to come under pressure or maybe see a rebound? Talk me through that.
Yeah, I do look at the bond market. I had the feeling in middle of May that maybe the reflation trade had gone a little bit too far, and I was quite exposed to that. You do a little bit of analysis of the bond market. You look at that sentiment. You look at where the money is flowing. And I think, some of those momentum trades also had solid fundamentals, like Enphase, for instance. I like Enphase a lot. It's a profitable company, a growing market, a leader in that market. This is like solid long-term fundamentals. Obviously, at 250 per share, I don't like it so much. But when it goes down to 100, then I start looking at it again. So I say I wouldn't make momentum trades based on solely momentum. I think I need to see strong fundamentals still. But yeah, I think it's a bit of everything I said and you said in terms of looking at momentum. And on top of that, you have a layer of Elliott wave analysis that actually works pretty well for me.
Okay, interesting. And for those of you who are listening on the podcast, whether it be Spotify or elsewhere, rather than watching on YouTube, if you don't have the chart in front of you, I've just got it to the screen here, to the other side. That was Plug, actually, to pull up Enphase, which traded strongly yesterday. Yeah, you were looking at 110 back in May, and it was roughly the 10th when it bottomed, and it's now up at 167. So you've done like over 50-60% return there in that position in a couple of months. So that's really, I think, yeah, it shows what a great trade that was and how you really timed the theme. So in terms of the core portfolio, Lex, is there something you want to understand in terms of, or you think people could learn from in terms of how you go through the idea generation process for maybe your longer term holdings? Because I know that's something that Lex and I look at from the perspective of what we call the 5 steps in sort of our trading process or idea generation process. How do you ultimately look at the world and then determine what you want to hold maybe longer term in your 80% portfolio?
Yeah, I'd say do both top down and bottom up. I think top down is I have my themes that I believe in, digital transformation, investments into infrastructure, and green energy, for instance, are like 2 of those themes. And so you kind of try to look, okay, where is the world going? And so where do I need to put my money? Still, everyone believes in green energy. So you still need to have a sort of differentiated view if you want to start investing, because if your view is consensus, then you're going to get market returns, not better than that. So it's like looking at the world and trying to see where you have a sort of slightly different angle, for instance. And I've been much more bullish on semiconductors or green energy than most people have, and I still am. And that's why I'm still holding them. And so you sort of drill down from sort of like macro trends to industry to company. And then there's this sort of like more bottom-up approach where you see things around you or people tell you about things. And so you hear of that great product or that great company. And so you look at the company and then you look at the market and then you look at how does that sort of fit into the sort of like macro where the world is going. And so I sort of like combine those two approaches.
Sure. So of the 36 holdings that I can see you have on in your portfolio on eToro, if there could only be one, and I know that's a tough question, if there could only be one that you'd hold for the next year or next 5 years, who would it be?
As of today, I would say Taylor Morrison.
Really?
It's a US home builder, and I think I have a fairly differentiated view on home building in the US. I think the demographic trend is really interesting there. You have millennials coming of age. They don't have homes. They're starting to have money. And there's no homes in the market, you know? There's just no new homes. There's no inventory, nothing. So what has to happen in the next 5 years is that, you know, home builders will need to build a lot of homes and will need to sell them at really good prices because the market is really hot. And I think, you know, Taylor Morrison is valued at like 5 or 6 times this year's earnings. And I think earnings are going to grow from there. And I think multiples are going to expand quite fast. So that's 3-4 times returns over 5 years easily.
Interesting. I've heard of the whole bull narrative around household formation in the US, with millennials eventually getting onto the ladder, or increasingly doing so, and then starting families later, increasing, hopefully then consumption follows. Lex, you've presumably heard a few things around that narrative. What's your take on the millennials gearing up and getting onto the housing ladder in the US? Do you think that's a long-term bull theme, or do you think it's maybe a bit consensus?
Okay. Yeah. First of all, I need to apologize for the lighting behind me. I'm not that visible, which might not be such a bad thing anyway. What I was thinking first, though, before I give my opinion on housing, was how interesting it is that you're based in Barcelona, and that's correct, right?
Yeah.
Yeah, and that makes it so fascinating that, you know, you don't need to be in London or Frankfurt or Paris. I mean, obviously Barcelona is a big city, but what it shows to me is that you can kind of be based anywhere. You have the access to a lot of the information, and, you know, you're trying to differentiate yourself by thinking differently. And, you know, it might even be an advantage that you're away from all the noise. You used to live before? You were in London before? Is that how it was? And then you moved to Barcelona, and yeah?
That's correct. I spent almost 6 years in London, and it's exactly as you say. I think you get a lot of network, you get a lot of knowledge there, relationships, but you risk sometimes getting into a sort of groupthink of people looking and thinking alike. It's a bit of a danger sometimes.
Okay, and so how and I'll go back to my view on home building maybe later. So how important is discipline for you? Because, you know, I see you do some trading with like quite well. Some part of your portfolio is like kind of high intensity trading, and the other stuff you keep longer term. But how easy is it to, you know, stick to your game plan and not, you know, sit bored behind your machine for like computer for like a few days, and you think, actually, you know what, I like, how hard is it to sit on your hands, and how much of a disciplined guy are you?
I would say very disciplined, maybe too disciplined actually. If I had been less disciplined last year, I would have made better returns.
Right, okay, better than the 90%.
Yes,
okay.
I mean there are a lot of companies that I sold too early. You know, I got out of Tesla and Spotify, for instance, way too early. I went out of Apple way too early. You know, just because I looked at the valuations and thought, oh, not for me anymore, and, you know, and it tripled from there.
Okay.
So I would say sometimes too disciplined rather than not enough. It comes back, I think, to my. Sorry.
No, go ahead. Sorry.
No, so it comes back to my training, really. I mean, I started in M&A investment banking, and it's all about discipline. You know, you do your slides and you look at it, and there can't be any typo. You know, you have an 80-page deck, and there can't be any typo, and all the valuations need to be okay, and the multiples okay, footnoted. You know, everything. And private equity the same. You know, when you get in with an investment memo, it needs to be really tight. You know, really strong. So.
But that's as much. I guess that's as much attention for detail.
Yeah.
As it is discipline, right? So you put a lot of hours in, I guess, before you
exactly
execute a trade, right? It's not like, oh, you read a news article and oh yeah, let's go for these home builders. You know, no. You do proper.
There's a lot
proper
of
work.
Exactly, a lot of modeling behind it, and a lot of analyzing the market, and, you know, every investment I made, at least, well, maybe not the momentums one, but the fundamental core ones. There's a sort of 5-year financial forecast behind it.
Okay, that's pretty impressive. And do you feel that attention to detail has then made the difference, or do you think it's you can have such a thing as, you know, over analytical and actually, okay, you learn something more, but, you know, it doesn't really make the difference in the end?
Yeah, it's a bit of a trap. I would agree with that. Sometimes you get too bogged down into the details and then you lose that vision. So you need to kind of sometimes get your head out of the spreadsheet and you know, look at the word and look at the longer term. So it's a bit of a danger. Try to not fall into that trap, but sometimes I do. And I think there are investments, like if I think, for instance, about Alive Financial in the US, that was like a spreadsheet investment. You know, I looked at the numbers, the hard numbers and the fundamentals and the market, and I made that call that the stock was going to double or triple. It's not really an investment that I would have made based on my reading of the world, you know.
Yeah. And I think it's good for the people who copying you, that they understand as well that, you know, some trades maybe they could have found themselves, but there's like, you know, large part of your portfolio where you did do that hard work, where you did, you know, do your spreadsheets and your deep fundamental analysis. Because obviously, like for people who just only do technical analysis, look at the charts, anyone can do kind of quickly, you know, and come to probably a similar conclusion. But what you do is you know, something that, like I say, people can't really do, and you know, there'd be the advantage of following you, right, to get that, to get that in their portfolio. So different question also for James maybe. So of the top traders, who how much is pure technical, how much pure fundamental, how much is like combination? What do the best people do on average on the platform?
I think there's, and Hugo may be better qualified to answer this question, as he's been around for slightly longer than I have and is on a level above me, considerably above me at the moment. I think from what I've observed, there is always going to be at least a combination of fundamentals and technicals, because I think everybody looks at the charts. I think many of the popular investors or many users on eToro look at charts a lot more than they perhaps do fundamentals. And it still works for some people, but there clearly are exceptions to the rule. So in our first episode, last time around, we chatted with Jay, and it was clear that his depth of knowledge in some particular industries and stocks is just, you know, on another level compared to probably your average trader or investor on eToro. But no doubt we all look at technicals as well. And clearly, Hugo, as well, from what you've explained behind your process, I'd be surprised if there's anybody really on there, although, you know, you may have better knowledge than I do. If there's anybody else out there who's really doing the sort of modeling and forecasting and analysis on the fundamental side that you are, before then maybe looking at the charts. So that's probably my take. Hugo, what do you make of it all?
Yeah, I would agree with you. I mean, I think if you look at the top guys on eToro, I think there's a deep fundamental underpinning behind sort of what they do. If you look at Jay, if you look at Jeppe or Wesley, those are all people who know their stuff really well, and they know the sectors they invest in really, really deeply. Do they have 5-year spreadsheets, and do they spend hours and hours and hours researching every specific investment? I don't know, but they surely know their stuff. And so I think, you know, most of the returns and the outperformance that these guys get is from the fundamental knowledge. And then technical is maybe the sort of like extra kick that they get. I know, for instance, Jay does a lot of swing trading. He does it really well, and that probably adds a little kick to it, but that's just what it is, a little kick. You know, the basis is fundamental.
It's interesting. I think as well, Lex, just to add to that response, is from observations, I think a lot of it can be quite news-driven as well, not in terms of day trading economic data in that sense, news releases, but I think that's something which perhaps leads to the risk of groupthink, which is something which you were discussing earlier. then around geographically where you are located, maybe in the city of London. But I think on eToro, whilst it's online, it's a community in itself and quite a strong one. So I think just in the same way as perhaps FinTwit or financial Twitter, various other platforms as a financial community, I think it can be quite tribal, and it's quite easy, even online, to be reading similar stories and buy into a similar narrative all at the same time, whether it be around solar energy or a particular theme or the Fed or whatever else. And I would balance what we've just said around the combination of fundamentals and technicals and people really understanding the companies with also, I think there are a lot of people, and from time to time I'm probably guilty of this as well, being driven by news flows. And this year's been a real learning, I think, for a lot of people. It should be, if you've survived or been able to survive, because there's no way that you've been able to ignore the macro and what else is happening in the world and themes and sentiment shifts compared to, say, last year or last couple of years. And I know last year, 2020, was an exceptional anomaly of a year. But we went from, I think, the stay-at-home trade, which everybody was in, to all of a sudden in kind of January, February time this year, I suppose it began topping out in November, December, but January, February this year, when also then growth and momentum started taking a beating, we've seen big rotations. And I know how easy it is to be sort of pulled in one direction with the narrative. And as we identified earlier, Hugo, understanding when to sometimes go against the consensus when things have got to a sufficient extreme without, of course, getting absolutely steamrolled by stepping out in front of an 18-wheeler. It's a fine balance. So fundamentals, technicals, but I think the platform is a bit prone, like any other community or bubble, to sort of a bit of groupthink around the news and what's coming out.
I agree with that.
My view on home building is that, and I've been thinking about it a little bit. So when you think about sort of like general money flows, everybody's always looking at the interest rates, obviously the Fed and then everybody else, and say if rates go up, we need to sell everything because money's more expensive. Might be right, might be wrong. But I think for home building, what it made me think is that it's not just government interest rates, it's government spending. And if you can be on the right side of government spending, and you mentioned infrastructure before, if you know there's literally trillions going into infrastructure in Europe or energy transition, and I don't know how much money is being spent by the government in home building in the US. I'm not sure about that. But I think if you want to have sort of like a similar edge, to analyze those kind of numbers might be worthwhile. But it sounds like you do that anyway. You seem to want to be on the right side of government. That's something you look at, yeah, Hugo? Yeah.
I do, and I think I sort of made that bet back in April, May, that government stimulus was going to be probably bigger than at any time before because of the pandemic and because of the sort of the social mood has shifted on that. Like austerity is just really, it's not really an option anymore for governments, especially in Europe, but also in the US. I think the sort of social consensus is on more government spending, more government protection, and that's gonna stay for a little while, I think. And COVID has been a sort of like perfect excuse for governments to spend more and do more in terms of infrastructure, in terms of healthcare, of course. And that's something that you want to be behind, not against, in terms of trading.
So Hugo, I guess, Lex, unless there was anything else that you wanted to cover off, we'll probably bring things towards a conclusion now. But just before we do, Hugo, if you could go back 12 to 18 months when you were just starting out, you mentioned your first copier. In my case, my first copier was also my girlfriend, not yours. It was my girlfriend too. What would you say you've learned if you could go back and just tell yourself, do this, do that, don't worry about this so much. Here's where you're going to end up. What would it be?
Yeah, one, diamond hands. It's a bit of a joke, but really I should have held on to some positions for longer. And that's related to the second point, which is you need to understand the mood of the market. You need to understand sentiment. And looking at the eToro feed is a great way to do that, actually. You look at what people are investing behind, what people are thinking, you look at the mood. And that's a good indication of where the market might be going for at least certain stocks. So I think that's the learning is, look a little more at the feed, look a little bit at what people are doing and thinking and saying, and don't sell too fast.
I like that. I think that's a great way to end it. Lex, is there anything else you wanted to cover off, or likewise, I wanted to ask us?
No, not really. I think it's like, again, it's super impressive what you've done. Also, like, long only, no leverage. I love the way you go about building the portfolio and the work you do, and yeah, it's no surprise you've done so well. So congratulations.
Well, thank you.
So I suppose we can just wrap up with a little shout out or reference then. So for any of you who are interested in checking out the profile of Mr. Manenti and his performance, and whether or not you wish to copy him there, of course, is your call. You can check that out on eToro. Is it Hugo Manenti? If they just search for your name, they'll find your profile, Hugo?
Yeah.
Yeah, we'll leave a little link at the bottom, and you can see the 21% year to date versus, what's the S&P, about 13.5, I think, as it stands.
It's about that, yeah.
Yeah, so smashing it again, doing really well. As Lex said, no leverage, long only. Hats off to you. So thank you for your time, and we'll wrap things up there.
Well, thank you very much for hosting me. It's been a pleasure, and hope to do it again in the future.
Thanks, Hugo. Thanks, James.
Thank you.
Bye.